If you're new here, this will be a call that eventually will only be available to paid participants of our community. Right now we have it open for free because we're a group of traders who built a strategy together as a team that just became so special. And we were so confident that if we just opened it up and showed people the value of what can happen for you as a trader by joining our community was really powerful. And so we said, let's just open it up for free and be an open book here. So we still have about a week or so of this free period, and then we're going to be closing off the free calls. Everyone who does attend, whether it's free or in the future as a paid member, they're doing so at their own discretion. We present all of our trade ideas and information uniformly, meaning we don't provide any financial advice. We have no regard for your trade objectives or your own financial suitability. Remember that trading carries high risk, and if you join the call, if you choose to follow or act on the ideas that are discussed, you acknowledge that you're trading at your own discretion. You're always fully responsible for your money and for the outcome of your trading decisions. And just it's wise to remember, don't trade with money you cannot afford to lose. So our strategy, this is one of two parts. This is the first part. It's a morning open call that we do. I'm going to give a quick overview, so pay close attention so that you understand what's going on. We're using a MetaTrader 4 application to look at the market. That's a free app called MT4. And we look at the futures version of the Dow Jones called the US 30. That's the instrument we look at. We have this interface that we built that everyone who becomes an active member once we launch will get access to this interface that shows stats and the ability to close all your trades with a single click of a button. Now on our coaches screen, you'll see green lines running across the screen called the buy zone, red lines called the sell zone. And the way this works is after the market open at 9:30, if we see a green candle pierce through the buy zone, along with other points of confirmation, we may look to get into a buy trade. If we see a red candle that pierces into the sell zone, we may look to get into a sell. We don't jump in blindly. We're patient because there's multiple points of confluence. We have a lot of confirmations that we're looking for. So we just watch and learn. We watch and listen to our 21-year trading veteran coach, Mr. Coach Maurice Katz, who's explaining and talking about what he's seeing and what he's doing. Now, every day is totally different, right? The markets are unpredictable. Sometimes we have no clear direction and we don't trade. Sometimes we take multiple trades. If you see the coach get into a trade and you're watching a screen, you'll see these stats start to change in real time to show profit or loss that's happening. Now, that's how we get in. Now, we get out if we see a drawdown of around 3%, or if we see opposite color engulfing candles, meaning if you get into a buy and then all of a sudden you see these huge red candles appearing, that's a sign, one sign that the market could be abruptly changing directions, right? And our risk is small. We want to be tight with our stop loss, and so we do look to close as well. And the goal of the day is to just grow by a few percent and close as quickly as possible. Losing days are unavoidable. Today may be a losing day. We've had 2 losing days in the last 21 trading days, and we're just going to keep going. That's the part of trading, just like striking out as an amazing home run hitter, just like getting punched as a boxer, right? Losing is a part of the trading journey. As long as your losses are manageable, then it still fits into the plan. Now, the vision we have here is to compound, and compounding your money by growing every day consistently includes wins and losses. Our goal is to win every 3 days and then not lose more than once every 4th day, right? So win 3, lose 1, win 3, lose 1. And at that rate, if we were growing a few percent a day, that would average out to 9% a week, which 9% growth per week it's incredible. And with a $2,500 account growing at 9% a week, that would grow to over 130 grand. That doesn't mean that's what you're going to do. We're just showing you a real math example that if you stick to something consistently every day, over time, it develops into something special. If you're new to trading, it's wise to use a demo account, practice, watch, learn, and observe. You have plenty of time to participate because we're going to be doing this for a long time to come. We trade with a 0.01 for every 1,000 total. That means if you have 3,000, then you could do 1.03 trade, or you could do 3.01 trades total, right? That's kind of our general rule of thumb. Of course, that does vary from broker to broker, depending on their leverage factor. So there's some prep work that you can tell before getting on the call. It's obvious that we have videos that you should watch before jumping into a live session so that you know what you're doing. we don't have enough time every day to go through the full training, but we want to give at least some information in case this is your first time. You need a little bit of background info on what the heck is going on here. So with that being said, we're ready to look at the charts, look at the markets. We have a Red Folder news event coming up in about 15, 20 minutes. So we're going to be extra patient and extra conservative today, but we're still going to finish the week strong. Coach Mo, I've given you share capabilities on the call. If you want to share your screen, go ahead and let's pull up the charts. We have a few minutes before the market is ready to open. And then after the trading session, folks, we will re-enable the chat and we'll see how everyone did, especially because it's Friday. Fridays are special days where no matter what happens, meaning even if we take a loss or if we don't take a trade, we love to hear feedback from the community of people that have been plugging in every day to hear how their whole week went, which gives perspective of if you would have showed up every day, then your results will be different than someone who is not disciplined and someone who can only show up once a week or so. So thank you very much. Best of luck to everyone.
Yeah, thank you so much, Sal. And as you can see here, ladies and gentlemen, that the market has been extremely bullish, meaning like it's going up, and it's been doing that for the last 15 minutes to an hour. Actually, it's been doing that for hours. So what's happened is it's gone beyond the buy zone. So that's where it becomes a little bit more risky to get into trades right now. So that's why we need to be patient. The market could be overly exuberant or bullish because if you look here, I'll just show you really quick. If you look here at the calendar and what Sal was talking about, at 9:45 in the morning, you can see here, I'm going to highlight it, 9:45, it says USD red folder flash service PMI, which means that there's a red folder news event. So because of that, it could be causing the markets to move prematurely. And sometimes because a red folder news event is near the 9:30 open, the real open could end up happening closer to 9:45. So, it's almost like we may not even take a trade at 9:30. And by 9:45, we may see a good setup to take a trade around the time of the red. But again, it's a little bit more risky to trade near a red folder news event. But just so you know, we may not take a trade today depending on how the market responds, okay? So what I'm going to do is I'm going to go back to the screen here, and you could see that, again, it's pretty bullish, and it's going pretty high above the buy zone, and the market hasn't even opened yet. And so, because again, the market's been running away. What I mean by running away, it's been going up for the last while. So we'll see how the market responds here at the open, and if we get a good setup. But we need to see the market calm down a little bit. Let's see here. It's about 43 seconds. And again, we may not take a trade. We'll see how the candles respond in the different zones. And we'll see how this goes. Thank you, everyone, for joining with us. There are days where we don't take a trade, and there are days where we take wins, and we've won a lot more, considerably more days than we've ever not traded or ever lost. So it's a strong strategy. Stick with us. You'll see it for yourself. Okay, so we've got 8 seconds before market open. Let's see what happens here. Oh, there it goes. It's getting a little crazy. Let's see what happens here. I'm just going to be patient. Yeah, that move was, that was a quick move right there. Hold on. Let's see what happens here. We still got 39 seconds of this move. Let's see if the market still wants to be bullish or not. Let's see, how big is this candle already? It's about a $40 candle. You see how dangerous this could be? Look at that. Imagine getting in at the very top and it's already going against you. I'm just saying, the market has not even, there's a red folder news event in 15 minutes. The market started above the buy zone. So let's see what happens here. We got another 4 or 5 seconds. Let's see what happens. Yeah, we pretty much potentially, let's see here. It's about a $30 move. That's not too big of a move. It's just the market is so overbought right now. It's pretty dangerous to try to get into a market open when the market's been moving so much and there's a red folder news event. See, if we would have got into that buy at the top there, it could be potentially going down here. So this may be a day we don't trade, ladies and gentlemen. And if this is your first time, you're like, oh man, I'm getting on this call for the first time. I wanted to see some action. I wanted to see a trade. Well, I mean, we're not just going to jump into a loss right out of the gate just because we want to trade. We got to use wisdom here. And so if you look at what the market is doing, you can see how, this was a higher risk trading session. And again, it's above the buy zone. This may come down pretty hard and enter the sell zone. Let's see. I don't know. See what the market does. Again, just so you guys know that are on the call, this is not, we're not gambling. We're not guessing. There's a lot of technical analysis that goes into this and why there are days where we stay out of the market and why there are days that we get into the market. So today is one of those days that has been a little bit more risky here. And it's okay. If you notice, even though it was a big bullish move, there's been no follow through. As bullish as it is, can you imagine you got this market that's been going up for the last, I don't know, hour, and there's no follow through on the open? I mean, it's just a tell sign that, So we're into the market open about 3 minutes already. And there's no follow through on this bullish move. The market's struggling to know which direction it wants to go. And why is that? Because there's a red folder news event that's coming up. I believe that's part of the reason why. So if anybody's watching, you'll see if you've traded with us for the last 3 weeks to a month, you're seeing why this was a good idea to not trade this morning. You could see it. Okay, so now we're getting into a potential sell here. Look at that. Wow, hold on. I'm not getting in yet. I'm just watching here. This is pretty wild, right? Look at this. This is about a $40 candle, $50 candle. Yeah, getting into the sell zone area, this would have potentially been a good trade, but again, it's very volatile, very risky, I think, this morning. But but this could have been a good trade here for sure. And I missed it. I mean, I'm just going to tell you we missed it. And that's only because, again, it's very risky to trade near a red folder news event, and you saw that it created a fake out to the top side, which I'm glad we didn't get into that trade. And then right away it started coming down against you. So let's see what this trade would have been if we would have gotten into it. Yeah, it was a small trade anyways. Think about this. If we would have got into this trade, I'm just going to share with you, if some of us would have got into this trade once it broke the sell line, right, we would have been about $20, which is 200 pips on a risky day like this. The risk is, to me, is too much for the potential gain. So that's why for me, I was comfortable staying out of the market this morning. Again, if you're a guest and you're like, man, what is this how it is? Well, there are days where we will not trade, but it's okay because we have the scalper after this trading session in the morning where you could trade throughout the day on multiple different instruments, multiple different time frames. So this is not, everything is not based around just this market open. However, this market open is an amazing event. It's the ability for all of us to get together, to learn, to grow together, to analyze the market together, and to trade together. I mean, so because of that, it's an exciting time to get together. But again, there are days where we will not trade. And so today just happened to be one of those days. I don't know what your thoughts are, Sal, about today and not trading and what you did. But I'm just being patient, and I just wanted to be patient. I'm glad I didn't get into a buy, because if I would have got into a buy, we would have been a pretty quick fake out. And then by the time we got into a sell and it got into the sell area, it's it already started turning around, and it didn't have any. Think about this. This big candle didn't have any follow through. So, it's really creating a ranging market right now. So with that being said, I think I made the right choice for my account. I don't know what you all did on your accounts, because you could choose to place trades whenever you want. And with that being said, I'm going to pass this back over to Sal, get his opinion, what his thoughts were about today. And, if I get into a trade or I decide to do a trade, I'll let you guys know on the chat while Sal's talking, and if there's a good opportunity. But the red
Yeah,
note
absolutely. Yeah,
holders,
feel free to interrupt me, Mo, if you do decide to take a trade. I see we're getting close to the buy zone. I don't know if we should. I'm hesitant to even start talking because of where price is at.
yeah, the only
know
thing
the
that
Red folder
concerns
news
me,
event is in 7 minutes.
yeah, the only thing that concerns me, even though we're getting into the buy zone, is that you've had such a big, strong move downward that you still would, it still needs to, it's literally creating, in my opinion, what I'm seeing here, it's creating a range right here of about $80 that it's probably going to start ranging between here and here. The red line and the green line, the solid lines are going to potentially become a rangy area. So soon.
So why don't, Coach Mo, why don't you share, if you can, share your screen, go to Forex Factory for those that are new to trading. And I'd love to comment on what are we seeing. So folks, if you can annotate Coach Mo and draw a red circle around that red folder news event, just to show everyone in real time, here's most likely what we're seeing. And I say most likely because no one knows every factor and variable that's affecting the market, right? But what we're most likely seeing is that in 6 minutes, there's a red folder news event. It's called a high impact news event. So what happens is these reports and announcements come out at key times throughout the day, by, let's say, political leaders, economists, people within the administration who help govern the economy. It's their job to update the world on what's really happening with the numbers and statistics within the economy. And right now, especially out of any time, there's a lot of volatility because of inflation. That's a big topic. And so in about 5 minutes from now, there's going to be a new update. And the institutional investors, they're one of the largest investors in the world, and they represent large financial firms. You're talking about your hedge funds, your large broker services, in the U.S. You're talking about, BlackRock and different companies that have billions and trillions of dollars in assets under management. They wait for these news events to come out before they make a decision, because they know that if they make a decision prior to that time, and the closer you get to the time, the more risky it becomes, because there can be an abrupt, sudden change where, if you're trading with $500, $800, think about how differently you would act if you were trading $2 billion, right? 2 billion, and it represented 10,000 investors. You don't just jump in. You don't just say, hey, let me try to snag 300 pips real quick, right? You're like, there's thousands of people's money at stake here. I got to be careful. So when they place buy and sell decisions on the market, a lot of them are actually acquiring or divesting of assets, which actually move the market. So here's a good piece of education. The way we're trading does not impact the market. A lot of people ask, wow, what if there's 50,000 of us doing this? Is that going to impact the market? No, it's not going to impact the market. Why? Because we're not trading securities. We're not acquiring or divesting of assets. We're trading on margin. We're trading a futures contract, which means that we're just speculating on the price of Dow Jones. We're not buying assets within the Dow Jones, right? That's not what we're doing. However, the institutional investors that make big decisions after these high impact news events, their decisions do actually move the market because they're actually acquiring or divesting of assets. So if, for example, let's say BlackRock comes in and says, gosh, a terrible report just came out and the market can experience a bearish turn. I don't want to lose 1% of our overall assets under management. So we're going to unload what we have now, place a sell for $2 billion. That accelerates the volatility, but they wait to see how the sentiment and how the fundamental analysis looks before they make those decisions. So that's what we're seeing. And that's why you'll see kind of just this choppiness and ranginess up and down. Now, my thoughts, I'll say this. We could watch this for a few more minutes to see if anything happens at 9:45. But here's my thoughts for you. What's relevant to us? A lot of you are new, and so it's like being a child at an amusement park. And that's not a condescending analogy, right? Because I'm the same. I'm talking about myself. It's like being a child at an amusement park. And this was the day that you planned to go. And then you show up and the one roller coaster that you want to get on is down for maintenance, right? That's what it feels like. And so then you're like, oh my gosh, like Coach Mo said, if this was your first day on here and we haven't taken a trade, it's like, man, I wasted my time. I got onto this 15-minute call. Oh, my time is so valuable. I can't believe I just watched these guys not take a trade. Oh, I could have been doing something else, right? You could have been on Facebook watching what people had for breakfast, but instead you're here, watching the market, right? And the flip side to that is this. I'm being funny, by the way. I have a dry sense of humor. The flip side, though, is this. The reason it's down for maintenance is because if they just say, oh, you really wanted to get on? All right, just open the roller coaster up. Who cares about maintenance, right? It could put your life in danger, right? It's for safety. And then if anything were to happen, oh my gosh, that would have been the worst decision ever. So that's how serious we take this. That's why if there's a red folder news event, if we identify choppiness in the market or a pattern of ranginess, we say, hey, we're down for maintenance, right? We're always gonna err on the side of caution. We're always gonna look at protecting our capital, because what we've seen in trading is anybody could make money, but very few can protect it. And so we knew that if we wanted to stand out as a group of traders, then we had to promote protection. We had to promote cautiousness, right? And I know some of you that have been in trading, you appreciate this, what I'm saying, right? Because you have enough experience to know that if you go to a theme park and it's down for maintenance, the last thing you want to do is say, well, just let us on anyways. Don't think so, right? So that's kind of what my thoughts are, Coach Mo. You could see, without getting into detail, if you folks look at the first big bullish candles that came out after the open, there's a reason why those candles were forming in real time, and we witnessed those candles using the solid green line as a floor. And then there's another reason why when it pierced back through bearish, came back up, it started to struggle and created that big doji candle at the solid green line. There's a reason why that bearish candle came back in, came up, and is now trying to bounce again off that solid line. These lines, as Coach Mo said, entail a lot of technical analysis. These are special zones that are placed every day at different levels based on a lot of analysis. They're not random. And you could see every day why and how price reacts to these zones.